Good morning, everyone, and welcome to the Sirius Report. My name is Ken Shorgen. I'm here with London Paul, and there's a number of different things, Paul, on the financial side we need to look at, both domestically, geopolitically, and with other nations in the multipolar world. Paul, as always, I want to thank you for being a part of this discussion. And one of the things we're going to start at is with the Kazan summit coming up, there is more and more. I don't want to necessarily put it in the realm of speculation, but there's more and more information because we do have a report from the finance minister of Russia who has come out and said that they want to expand the accumulation of other precious metals besides gold as their reserves. And in particular, around the 18th of October is allegedly when there's supposed to be an official announcement that Russia will not only throw silver, platinum, palladium, and some other metals in there, but it would be at the point of about $51.5 billion starting in 2025.
Yeah, well, first off, thanks as well for joining me today, Ken. Yeah, you highlighted this point to me before, a few days ago, and we thought it was a great discussion point because it raises the question, why is Russia doing this? Because Russia has enormous resources, we know this, but so why is it accumulating resources? In this case, like you say, silver, palladium, etc. Well, for a number of reasons. One, they, even though they're not part of SWIFT, they are still probably in some senses in receipt of dollars in some way, shape, or form. So, or generally fiat currency. So they're going, well, because we're now trading in local currencies, they've probably got issues still with the fact they've got too many rupees. No disrespect to the rupee as a currency, but they're going, well, we can therefore sell the rupees we get for the oil and buy commodities. It allows them to stock upon critical precious metals. And in the process, it also helps to continue to drain the physical metal that exists in the West. And we can argue, and I think with a reasonable degree of confidence, I wouldn't say definitively, but certainly I think when we look at some of the nations like India buying huge amounts of silver, they always buy gold, so let's not focus on that. China buying huge amounts of silver now, Russia saying they're going to buy physical silver. This not only drains the West of physical metal, but it also puts huge strain potentially and undoubtedly to some extent, it's hard to quantify, on the likes of the COMEX, the LBMA, on what I regard as being paper markets in the West. So I don't doubt that Russia would, from an industrial perspective, have use for silver in the future. They're certainly growing and their industrial base. I don't doubt that they will get involved in a lot of modern technologies in the future. So the need for silver is self-explanatory. As one example. So I think there are a number of reasons for this. Why are they publicly coming out and announcing it? I mean, you'd think it might have been something that they just kept rather quiet about. Maybe it's some pointer to some discussion or other that may happen at BRICS, at the Kazan summit. I don't want to overact this. I've said there's people euphoric and people saying nothing's going to happen. For me, it's somewhere in between. I think there will be some significant developments, but not something that means we've definitively reached an answer on anything. There are many discussion points in the melting pot, but we're not here to discuss the Kazan summit today, because at the moment it's all very much up in the air as to what's happening. But I'm trying to say the timing's interesting. And I think it's just indicative also of the fact, I think in the future, we're going to see countries like, certainly we know China's already doing this in commodities, where they'll have their own commodities markets, and maybe in the future Russia can do precisely the same, and it will have trading, so you can trade physical commodities through Russian exchanges. I can clearly see this happening. So And I don't believe that Russia's announcement just is a short-term measure. I think this is part of a broader long-term strategy.
Absolutely. And one of the things that stuck out to me, and from this, I'm going to get into a little bit of a speculative thing that's going around in the fintech world. But Russia has focused on a gold accumulation for the past 7 to 10 years, going back to about 2014 when they got cut off from SWIFT and they started getting rid of dollars, de-dollarization, and looking for something for the reserves. They really never focused on silver or other of the precious metals. But right now, what we have, of course, thanks to India, thanks in large part to China, is we have the price of silver in dollars having shot up immensely, despite the fact that we are, for all intents and purposes, in a recession in the US and Europe. So what is behind all this? Russia is not stupid. They know pretty much what everything's going on, just like China does. And the COMEX itself has when you take a look at the Commitment of Traders report, the COT report, there's still massive amounts, between 450 and 500 shorts for every ounce of silver that they have for sale on the COMEX. So if you wanted to escalate or accelerate the demise of either the banks, the COMEX, or even a financial crisis, the thing to do then is to take your, as you said, rupees, translate them into dollars through a third party, buy as much silver as possible from the West, which would then cause all these banks to, because everything's on margin, cause all these banks to have to then cover their margins, cover their shorts. And the speculative part I'm seeing more and more is there are certain entities that are saying that the short position by the banks, the bullion banks that are involved in this, is so great that they've been trying to cover. It's not been feasible to do because of all the pressure, buying pressure that is driving up the price. So they are hoping for a COMEX default to wipe away their shorts.
Well, I mean, yeah, you've rightly said it's speculative, and it is speculative. It's possible. I'm not entirely convinced. I think, there are reasons why people may come to that conclusion, and I'm not saying dismissing it and saying it's absolutely not the case either. But what we do know very clearly, and I will use gold initially as an example of this, is when the US raised interest rates, the expectation is gold would have fallen to $1,200 an ounce. To look at the TIPS data to see how it would correlate with that figure. Now, gold's currently 2,600 and something, doesn't really matter. The reason it's 26 something or other is because of the enormous amount of gold buying that's happening in the East, like China, India, other countries also, that for that matter, Poland's buying, continues to buy enormous amounts of gold, Hungary and other countries. That has caused immense pressure because of the physical buying in the East, which has put pressure on the paper market. So the argument is, well, silver's currently, it's had a lot of volatility. You can expect that going forward, but it's risen it got nearly as high as 32 or just over $32 an ounce, now about 30.50, something like that. I don't know, roughly. And the reason it's got that high again is because of the enormous amounts of physical silver that's left the West and is gone to the East, and it's caused immense problems in the process for paper markets. So they can't suppress the price the same. There's no doubt there may be in recent days some evidence to support that viewpoint that these bullion banks, whatever, are in trouble with these short positions, because I think we've seen clear evidence the last few days of an attempt to really try and smash the price. That could be as much as anything to do with trying to avert a short squeeze. That sounds a bit odd, but if you're in trouble, you'll do anything to try and knock the price. You're trying to reverse the trend we've been seeing in this price moving up, because maybe 32, 33, I don't know, is a problem. I'm just speculating again. But I think there are huge problems, and certainly for countries like Russia to come out and make this announcement, there may be an argument that says, why do they need these? All these kind of precious metals, do they really need this? Well, clearly there's a reason for doing it. We've highlighted some of those reasons, and it could be as well as just putting huge pressure on the West. I don't doubt that that the Chinese and the Russians are putting huge pressure on the West. The Russians have their reasons, given what's gone on in the Ukraine war, and the Chinese also because of the issue of Taiwan, and also because of the issue of the US trying to start a trade war and basically trying to cripple China's access to chips, and also trying to destroy Huawei, which failed. So there is motivation for both those countries to decide that they might do something in retaliation. And I'm not saying they don't want the precious metal either. I can perfectly see why China wants more gold and other countries want more gold, because we know the broader problems that exist in the Western financial system.
Yeah, and the things like silver, gold, platinum, they're universal metals. Besides some of the industrial capacities, there's also their monetary metals are recognized. So Russia is not holding dollars. They're not wanting to hold dollars. If they're doing bilateral trade and they're not doing an equal amount with the country that they are accepting, they're, in this case, India for oil, they want to go ahead and transfer that into something that's more universal. It's easily understandable in that capacity. One of the fascinating things, you brought it up, and I wasn't going to talk about it, but something you just said is interesting in regards to the hurricanes that have hit the Gulf Coast and the Atlantic Coast. There is one certain area in North Carolina that provides the vast portion of gypsum, which is used in the silicon chip making for the United States. And that region, the bridges getting to it, the train tracks getting to it, have been devastated. If you think that the U.S. is going to have trouble competing with China in the chip markets going forward, this is something that could affect them for the next several years. So I just wanted to throw that in there.
No, it's a great point, Ken, and to back that point up, sorry to interrupt, but I just thought it was worth mentioning this. Remember the incident with the ship hitting the Baltimore Bridge? The ship's only just being removed. When do we think that bridge is going to be built? 5 years? I will be surprised if it's never built. So your point is extremely important, because this also ties in with the fact that China has stopped shipping germanium, for example, which is important in semiconductor production the US needs. So there is clear evidence that, again, that there is retaliatory action being done by the likes of the Chinese. And that's just another clear example. So, as you say, with the devastations there, and just a small point, there's a friend of ours whose son lives in one of the epicenters of the damage with the first hurricane, and he was fortuitously, his house was spared, but he said the devastation there was absolutely horrendous. And I don't want to labor this point too much, but the lack of a response by the government or FEMA or whoever's supposed to deal with these problems is being absolutely shocking. So, that's a separate point, but it's a point that says, well, when are they ever going to fix these problems caused by this hurricane? And the question is probably never. So if that's the case, then they're going to have a huge problem, as you said, with gypsum.
Right. Anyway, yeah, I wanted to throw that in there, but getting back to China and the United States, interesting enough, there's been a lot of scuttlebutt over the past few weeks in regards to China's economy. The Western analysts who have no understanding at all about China are focused on their stock markets. Oh, China's got to throw stimulus in to protect their stock markets. We need these investment opportunities. It's almost as if the West is desperate because they've already shot their own stocks, overvalued them to all-time highs and just mind-boggling levels, that they got all this credit in the form of dollars that they desperately need to put somewhere else. And so they've been hoping and relying upon the Chinese stock markets. But the big difference between the US, and we're seeing this, they're willing to depress the price in the paper markets of commodities, gold, silver, and especially oil, which has been on the verge of falling back below $70 a barrel, after on Friday it was upwards of $80 a barrel. They are trashing the commodity paper markets in order to pump stocks to all-time highs, even in the midst of a recession, even in the midst of a retail consumer slowdown, while China, to their mentality, the stock market is always secondary. It's always the general economy. It's about manufacturing. It's about production. It's about providing things for the consumers, as well as keeping their trade export open. So it's kind of funny where you see Wall Street making statements that are complete, unbased, prevarications, in order to show the fact that they are unable to really tap into markets that they don't understand in China, in the Southeast Asia, et cetera. Because what are you going to do? You can invest money in Japan? Not a chance. You're going to, do the Japanese carry trade and just buy bonds back and forth? Who cares? It's a meaningless gesture. They desperately need new markets to be able to invest in. And unfortunately, they see things only in stocks. Why? Because the US has moved into this thing called financialization. Take a look at some of the commentary, whether it's on the business news, whether it's from the politicians, et cetera. They refer to the economy as the stock market. They, whether it's Biden or Trump, look, I've taken the stock market here. The economy is good. Well, you've lost tens of thousands of businesses that you're not getting tax revenue from, and you're losing pretty much the consumer is all tapped out. That's the general economy. And that's unfortunately where you're going to see the things really change politically this election, is because the people vote, the politicians just try to find ways to make themselves richer.
Yeah, exactly. And and this has really been this fundamental problem with financialization, because as you say, Ken, in the West, we're completely obsessed with ever inflated asset prices, like through equities, for example, because apparently that's what makes our economy strong. Well, it's so utterly nonsensical. It's an embarrassment to anyone with any degree of intelligence, because it has nothing to do with the real economy. The asset prices of equities bears no resemblance to the fundamentals of those companies. And this is why financialization of economies has led in the West to destroying real growth, productivity, innovation, because the focus has shifted to all these meaningless assets and their prices. And these have been constantly inflated, particularly since 2008, because otherwise the Western financial system will collapse. This is why they start panicking when equity markets start getting hit. And it's why you hear central banks constantly go on about stable asset prices. In reality, what they mean is we need ever-inflating asset prices, because so if we have weakening asset prices, meaning, for example, equities are getting hammered, then our economy is in big trouble. It's got nothing to do with the real economy. What they're telegraphing is our financial system is going to be in serious trouble. And this is why, of course, you have this problem because of financialization, where when they hiked interest rates, we started to have all those problems in regional banks and arguably amongst some of the bigger banks when they tried to hide it with those kind of bailout vehicles they had. So in essence, and this is the big difference between the West, the United States, Europe, UK, and the global South, is financialization is destroying the West and has been for decades. And whereas the global South nations are striving for real economic growth, to have vertical growth drivers, to have innovation, to have industrialization and productivity, and to utilize real resources in their country that they own, as opposed to countries in the West stealing them or buying them for cents on the dollar, as they have done with colonialism and neo-colonialism, or even just stealing them for that matter. That's the big fundamental difference. And it's just some people, the people in the West do not understand the difference. The global South and how their economies work is such a radical departure from what we have in the West. So it doesn't matter with China's stock market what happened. It doesn't, it doesn't matter if the stock market goes up 30% in a few days or down 20%. It doesn't fundamentally actually make any difference to the fundamentals of the businesses. I mean, there's an argument, and quite correctly, if you look at the fundamentals of a number of Chinese businesses, that their stock price is significantly lower than it should be. And okay, part of the reason, and this also could be why there's been retaliation from the Chinese. There's no doubt there was a concerted effort to pull equity out of stocks, or just pull capital out of equities and relocate it to the West. Now, there could be a number of reasons. It could be because people are shoring up problems in the West, which is true, but also because they're trying to cause huge damage to China because there was a big play. Look, all this foreign direct investments leaving China, there's huge capital outflows. It was only out of equities and investments, that kind of thing. The flip side is in terms of foreign direct investment in real tangible assets, things that matter in business, in buying assets, though, but actually have value. It's been increasing. That's the big difference. So the investment in the real economy, which matters, continues to thrive in China. The investment in the financialization component of their economy is diminishing, and it's probably because there was a desire to deliberately assault China's economy, which the West believes to be their economy, which it isn't, because they think, like the West, that the equities is the Chinese economy. It's not. So they thought we can attack the economy by trashing their equities, by pulling all this finance out, but also in part because they're trying to shore up holes in the West. So therefore, dump equities there and use the capital to shore up a problem in the Western financial institutions, hedge funds, whatever. But fundamentally, we're just at the point where the West is still all about financialization, which is failed. It failed in 2000, failed in 2008. It's failed ever since. And we're still obsessing about it while the rest of the world's going, the future's about holding real tangible assets. It's about energy security, food security, you taking assets and producing goods through industrialization, productivity, and have innovation to be at the forefront of new technologies, and taking a yuan and making 2 yuan, taking a ruble and making 2 rubles, whatever currency you want. That's one of the big fundamental differences, and it's just something that is totally lost on so many people in the West. They just don't grasp this, and that's probably because most of them have spent their entire life, or as long as they can remember, living in a world of financialization, which has been around probably now for getting on for 40 years.
Exactly. One last thing I want to touch upon is the interesting thing that China is also doing. Europe, of course, is now jumping into the tariff game against Beijing, but it's really divided the continent. The reason why is especially with Germany, Mercedes, VW, they produce a lot of cars in China itself. Well, a tariff would be taxing yourself, because once those come in from China, it would be tariffed as being built in China, et cetera, et cetera. And when you take a look at countries that are for tariffs, like France, Ireland, Italy, the Netherlands, et cetera, what do they export? They export primarily agricultural goods. And China can simply find other avenues, or they can tariff and tax those just the same amount. So it's a tit for tat in the case of China versus Europe, that Europe really is doing it out of pettiness, and they're in some cases taxing themselves with little effect that's going to actually hit China.
Yeah, just to comment on that, Ken, with regards to these tariffs up to 45% on electric vehicles, there's a big story because there was a vote. Most nations abstained. If they'd actually,
Right.
which means they didn't agree with it, but they didn't have the backbone to say, we don't want to vote against it. If they vote against it along with the other countries, then the motion would never have passed. Very few countries actually voted for it. So at the end of the day, this is going to have an enormous backlash. And when you look at the statements coming out from German car producers, they now understand how idiotic a policy decision this is. But this policy decision was the European Commission. Who is at the European Commission at the behest of? The United States. Why would the United States want to see these tariffs happen on Chinese imports into Europe? Well, the statement's obvious, because it's another way they think that they can damage China's economy. And in the process, Europe's going to suffer enormously, but there was no mandate for this. If you strip out the people who vote, the countries who voted against, and those, I think there was 12 abstained, then you would have easily had a clear majority of those against it. So basically, the majority of Europe was against it. Some of them are just don't lack the backbone to vote and say we're not accepting this. But there's still, in the end, watch what happens. I doubt this will ever come to pass, because big corporations are reaching the end of the line with the European Commission and what the damage they're doing to European businesses. Never mind the whole issue of cheap energy. This is just basically kicking them in the teeth when they're already down on the ground because of all the problems they're suffering. There comes a point when big corporations are not going to accept this, and there will be a backlash, because I think increasingly everybody realizes, well, if I had sovereignty in my nation, I could just say I'm voting against this, and you can import cars into my country and not pay any additional percentages, these tariffs. But they can't do it. And that's why there is no sovereignty in Europe. And the European Commission's overextending itself, and that could also be a contributory factor to the demise eventually of the European Union as it exists in its current state.
Exactly. Anyway, Paul, I think that's a good place to end it. We covered a lot of different things. As always, thank you for being a part of this great discussion.
And likewise.
And to everybody here at the Sirius Report community, thank you for being a part as well. Don't forget to subscribe, like, share, comment. Send this out to anybody you think it might be important to. And until the next time we get together, have a great day.